Next up is a question from Drew. He says, is there ever a situation when college savings would come ahead of maxing out a 401k plus or a Roth? He says he feels like he's losing an opportunity for 529s to grow significantly for his 3-year-old and his 5-year-old. So maybe recap where these things like 401k and maxing out and 529s fall in the foo, and then talk about the nuance there or what you guys think.
So is there ever a situation where maxing out, where saving for college comes ahead of maxing out a 401k? Is there ever a situation where it should happen, or is there ever a situation where it does happen? Because unfortunately, we see parents do this all the time. Our natural bent as parents is to love our kids and provide for our kids to the detriment of ourselves. I have a newborn. I love that little sucker so much that sometimes I choose not to sleep at night. I'd rather wake up and change his diaper and hold him and hand him to his mom. And I just choose to do those things because I love him so much. If I did that forever, it wouldn't be great. My health would deteriorate. I got to get more sleep. It's one of those things, but it's a season. Saving for college is no different. If we prioritize saving for our kids, saving for their college, at the detriment of saving for ourselves and building up our own financial independence, one, we're not setting a great example for them. And two, we're putting them in a position where later in life, they might have to be our backstop. The single best gift you can give your young children is to put yourself on a financial footing where when they are now your old children, you don't have to go live with them. You don't have to move into their basement. It's why, and Brian, this is the part I want you to speak to, it's why we structured the financial order of operations the way that we did. It's why step 6 maxes out your retirement plan, starts at step 6. And then you move to hyperaccumulation 7. And then you move to prepaid future expense 8. Brian, you want to show them the thing in case I've never seen it before?
Of course.
Talk a little bit about why we built it that way.
Well, I was kind of lost in that we were giving a presentation to some engineers on the financial order of operations, and we had an engineer raise her hand, and she basically kind of accuses us of being mean because we didn't have the kids prioritized and the 529s, and felt like it was bad. But I want you guys to understand, we have built the grace or the flexibility into the steps, and the fact that you can easily graduate, or I shouldn't use the word easily, you can graduate beyond step 6, which is max out the retirement, and move to step 7, hyperaccumulation, and then move on to step 8, which is prepaid expenses, which is where the paying for 529s exists, by getting to 25% of your gross income. And the big reason why are we so rigid on this? Because we are the flexibility guys. Why are we so rigid? It's because, as Bo has already kind of alluded to, your kids, as much as we hate student loans, we don't like student loans, but there is the option that a student can actually go get a student loan and have the ability to finance their higher education. We'd still encourage them, don't finance more than what your first year's salary. Let's put some guardrails on it. But you in retirement, what are you going to do? I mean, there's really not a lot of tools. There's not a lot of, you don't see those advertisements where people are telling you, I guess you do have Tom Selleck pushing the reverse mortgages and things like that, but that's not the most viable option, and I even saw, I've been saying it for years. And then I think it was the New York Times. We probably, we don't have it, we can pull it up right now, but I did a whole, show on it, where it's finally something I said, has turned out to be a reality, is that they were talking about the trend where parents were moving in with their adult children. And, and this was a new thing that was going on. I think this was based out of New York. Just like I said, it was New York Times. And they had people smiling on the cover of this article. And I thought it was look, there's nothing wrong. I love extended families.
If you choose to do it.
If that's what you choose. But this article was written from the stance that these parents were moving in because they had no other option. They had focused on their children to the point that they were broke. And now their retirement plan, their housing, not just retirement, just shelter, was their kids. Don't be that way.
Yep.
Go ahead. We have created a system. Yes, it is hard in this capacity, but your future self will thank you. Your children will thank you. And maybe this will also cause you to refocus on, hey, where is every dollar that comes into my household going? Is it purposeful, or is there some waste? Is there some excess somewhere else, so that I can get to step 8 and start funding the kids' accounts that much sooner. Because look, we love 529s. 529s are phenomenal. You can use them K through 12. You can use them not just for college, you can use them for trade school. There's lots of opportunities with 529s, but make sure that you do them at the right time and at the right place so that your financial self is in a great, stable, good place where you have a fulfilled and best version of your financial life.